Ladies and gentlemen, welcome to Team Braconi Live. My name is Doug Friedman. We're live here from Undefeated Media Studios. So if you have a question, comment, or concern, please put it in the comment section. We can answer you live with us today. So without any further ado, your hosts, Alfredo and Steve Braconi.
Thank you. How's everybody doing today?
Doing good.
I feel great. I felt like I got hit by a Mack truck the last couple of days.
Oh, yeah?
So I'm feeling much better now. I'm feeling revived. So ready to get this going today.
Nice.
Today we wanted to cover some topics that we've touched on, in recent conversations, but maybe a little more detail today. With the changing market, we'll talk about what sellers need to do mentally to change their mindset. If they've been paying attention to real estate over the past several years, they think they're going to get everything under the sun, and that's clearly changing now. So we want to touch up on that mindset shift. And then as far as buyers, is it a good time to buy right now? We recently had a dip in the rates. We'll go over that and what that means for a buyer in this market, and if that's something that's going to hold up long term, or it's just short term effect. And with that, as agents, what can we do, or how can we help buyers and sellers controlling their emotions? So a couple more topics follow up with that. But with that said, let's dive right in. So what sellers need to know in today's market? Steve, what are your thoughts on this particular topic as we kind of went over it a little bit?
Yeah, so I actually just got back from quick vacation and
That's right.
was thinking about that a lot, because it is a completely dynamic shift. And so truthfully, a lot of agents that haven't been in the business more than, I guess, 3-4 years haven't seen an alternative market, right? So we've seen all types of markets. You've been in the business a long time. I've been on it a little over 20 years. So yes, it was completely to the seller side, where, to your point, buyers were willing to give up everything in the sense of mortgage commitment. They were risking their deposits, saying, okay, if I don't get the commitment, I'm so sure of this, I'll walk away from my deposit, at least on legal terms. Waiving home inspections or minimizing the inspection to the point where it has to be basically structurally unsound or a major mechanical failure or something like that. That's kind of going by the wayside. And so is the appraisal issue, in the sense that buyers were willing to waive the appraisal value, meaning even if the bank doesn't agree with the amount I'm willing to pay, I'm okay with that. If they say it's worth 600, I'm good to pay 650 or 700, whatever the number was, which is crazy, because then they had to sometimes increase the deposit ratio of the mortgage would change, and various other factors. We don't need to get into all that, but basically buyers were willing to give up a tremendous amount of their rights in order to have a better chance at getting the property. So what we've seen in the last several months is that completely shift. Multiple bids, although are still, I would say, occurring occasionally.
Yes.
It's certainly not the norm. Before, it was literally just about every property we had would get at least a couple offers, if not a couple dozen offers. So now it is shifting more, where we're trying to give our sellers, the knowledge that might not happen. You can't count on that anymore, and you have to price it correctly. I went on a listing appointment last week, and truthfully, I walked away from that particular listing, not because I didn't want to work with the client, and it was actually a fantastic property, but because the numbers that they had in mind was just purely unrealistic. That was not going to happen, probably in the better market, and certainly not now. So I felt like it would be a disservice to them if I promised or stated, yeah, that can happen, or even let's try that and reduce, because that's the worst thing you can do in this market, is try to get more and then reduce. Because now when you actually get to that right price, the days on the market have risen to the point where many of our buyers think there's something wrong with the house. Usually nothing's wrong with the house. Almost always nothing is wrong with the home, other than it was incorrectly priced.
Right, and they'll try to take advantage of that point.
Yes, you'll end up getting less, because now they're going to negotiate off what probably should have been the right price in the beginning, and you had to reduce it to after 30 days in the market because it's been 30 days and now you're at the right price. And what the trend we're seeing with the market, it continues to come down, and it will continue to come down, in my opinion. So they're just chasing the market. The tide's going out.
What's the benefit? You say they want to waive the appraisal, right? So is that so it's less that the seller has to pay and they get more money? Like what's the benefit of waiving the appraisal?
It's a great question. So if in the market before, when prices were just kept going up and buyers were paying more and more and more because there was so much competition and so little inventory, the banks sometimes the numbers weren't catching up with what the market was dictating. So the market, being the buyers, might dictate $800,000 in a particular home, but the recent sales showed $720,000. I'm making up numbers, obviously, but that's just, so it would appraise at around $720,000, maybe $730, because they know that the market is appreciating. So they would factor for that. In that case, the buyer would say, okay, I understand it's worth $730,000 according to the bank's numbers. I'm still willing to pay $800,000 for it. Sometimes, depending on the down payment, it would affect the ratio of the loan. So they would have to put more out of pocket in order to make that happen. Other times there was enough down payment, it would cover it. But certainly their mortgage, wouldn't change. But in the case where they weren't willing to waive the appraisal, which is what we're seeing now, one of three things would happen. The buyer could still say, okay, I'm still willing to pay that for the home, even though the bank just told me it's not worth it. And in a normal market, that's not going to happen. Typically, no one wants to pay more than the home is worth. If anything, they think that the agent perhaps misled them or didn't represent them properly. And so either they pay more, which again is not typical. They back out, which oftentimes happens because they feel misled, and perhaps there was dishonesty there at some level, and maybe there was, maybe there wasn't. Or they pay the lesser amount or somewhere in between. So either they pay up, they back out, or it's in renegotiation. So we do see a lot of renegotiations. Sometimes people meet in the middle. Sometimes whatever the appraised price is in that example, they're paying 800, now it's 720. If the seller agrees to 720, the buyer would then pay 720 because that's what the bank said it was worth.
Gotcha. And then the same thing, are people waiving the inspections too? Is that like a...
So they were.
Okay.
They were oftentimes waiving inspections because it gives you an advantage, because sellers understand that an inspector that comes in here that's working for the buyer is going to find something wrong with the house, even if it's brand new, right? They're going to, sometimes more if it's brand new, but they're going to find issues with the home, and you can quote unquote nickel and dime a bit. So you can get the price down by either issuing or requesting and getting issued a credit or repairs. And if a buyer is willing to forego that process and just do it either for knowledge only or not even do an inspection, which we've had happen, there's a risk involved because there might be things wrong with the home that the buyer didn't see, but they're okay with the risk because they felt as though that was going to give them an advantage, and the seller saying, okay, we'll go with your deal.
God, thank you. Cool.
Yeah. So I think the important factor is, having the agent explain to the seller, like you did in that most recent listing appointment that you didn't take, where we are in the market. And maybe they talked to friends, family that had sold their house in the past couple of years. They're probably still talking to agents who are looking at comps and pricing the property based on the increased expectation of where we were in terms of the home values. And we have to kind of take a step back. And
I've been through it before. I've been through this cycle before. And so I recognize what's happening. And typically when an agent agrees to take a listing, which is clearly mathematically overpriced, one of two things is happening. Either the listing agent or potential listing agent is purchasing, or we call buying the listing, right? Where they get the listing and now perhaps they show it and they know it may not sell, but they hope for a reduction, and they can maybe solicit other buyers through that home to show them other properties, even knowing that they may not sell. Or they have a lack of knowledge, a lack of understanding of what's happening. And I mean that, with all due respect, they just don't understand where this market's going and maybe aren't tracking trends, and they don't mean to make that mistake. But I've seen it happen. And what will happen most times is that home will fail to sell. It will go the 3 months, 6 months, sometimes a year contract, whatever it might be. And then they call the agent back, which in this case was me, and say, I hate to say it, but you were right. And what do you think it's worth now? Unfortunately, in a depreciating market, you continue to be transparent, that price typically will go down. And then you do the best you can with what the market is giving at that point.
Right. And it's like constantly shifting now because the things are in the market and the economy are happening so fast that when we're pricing homes, we're trying to not, we're looking at comps, but we're also trying to think of where the market is headed in the next couple of months, because we're not getting as much buyer activity. Buyer demand is slightly down, so it's really a really important decision that both the seller and the listing agent have to make, and it should be based on data and understanding of the current market conditions.
The listing agent's job, one of their responsibilities, is always to try to get the most you can for the property and market it properly. If you price it incorrectly to the low side, usually almost always we know it will bid up. So that's not the greatest mistake. The biggest mistake, like I said before, is overpricing the property, allowing it to get stale in the market, then eventually either not doing anything, letting it expire, or coming down to where you should have been in the first place. And now it's been on the market long enough that people think there's something wrong with the property.
It's funny you say that, because it's always easier to overprice it, right? But it has the most damage potentially. But valuing it correctly or just slightly under where we all think it is the hardest conversation to have with the buyer, because they're scared, with the seller, because they're scared that their house is not going to sell for.
But even if they don't appreciate it at the moment, they appreciate it in the end.
Of course.
Because you're going on statistical probability, and there's a massive chance that home doesn't sell overpriced. You'd have to get now in a depreciating market where inflation is very high, interest rates are coming up, buyer volume is down, days in the market is up. You'd have to get a buyer to understand that they do understand all of that, to be willing to pay more than the home is showing it's worth, because they're going to ask for comps. And even if they don't ask for comps, which is extremely rare, the bank is going to still have to appraise that property out, because like we just said, buyers are no longer typically willing to waive those appraisals. I think the next topic was we were going to speak about, is it the right time to buy?
Exactly.
Right? So
because last week when the CPI numbers came out, they were a little bit lower than expected. The consumer price index. So they came down a little bit lower than expected. So that moved quite a few things in the market. The Dow responded very positively, had a huge day. But more importantly for our industry, we saw a slight dip in the rates. They were a little over 7. Now they're in the mid 6s, maybe some 6.75 range, somewhere there. But nonetheless, a little bit lower. Is that a temporary dip, like you phrased the micro?
Yeah, I call those the micro pullbacks. I believe that, and again, this is my opinion, but I believe the trend will continue upward. I believe interest rates will continue to rise. I've said this for months, and so far I've been right. I still think that we have a ways to go to to do things to correct the economy, which will require the interest rates, unfortunately, being brought up a bit. So I do think we're going to continue trending up, but there will be micro pullbacks that, if buyers are interested in buying, can actually lock in those rates a little bit lower during those pullbacks and then purchase something. And as far as the timing, people ask, is this the right time to buy? That depends first of all, it depends what you're purchasing the property for.
Right.
If you're strictly an investor and you're paying cash, probably not. Because I just said the property values are likely to come down, and probably come down quite a bit. And it depends on the market, right? The market's different in each town, never mind each state across the country. But if you're buying to live there, there's an opportunity cost with life. If maybe you're having kids, maybe you need more space, maybe you want good school systems. So you try to hit those micro pullbacks, get the best deal you can now, and get in the game, so to speak. And what I mean by that is, over the course of time, probability again is that there will be equity built in the property, in the home. So you'll do okay. If you're looking to flip it in 6 months or a year, probably not the right thing. But if you're looking to move in, stabilize, grow a family, something like that, where you're going to be there and you're enjoying the home. You're not just simply buying this for an investment purpose. It's a great time to still buy, especially if you can hit one of those pullbacks.
Yeah, feel free to use me as an example because that's the exact situation we're in. So, I mean, we're looking, and hopefully, this pullback will help, and the prices will go down. So,
Yeah, I to your point, Steve, it truly depends on what your objective is. Even if you are a cash investor, it depends on if what you need to do with that money. Some people need to move that cash, and if the numbers work on a particular multifamily, for example, then it would make sense regardless, right? As opposed to putting it in a bank. I mean, they're not going to put it in a bank account. They're not getting anything, right? So if they have money, they need to move it. Maybe they're doing 1031 exchange. It's always going to be an opportunity to find the right property that's going to.
And it also depends on how much they're putting down, because the more money that you're leveraging, the more money you're financing or taking a loan for, the higher that payment's continuing to be. If you look at months ago, a year ago, whatever, and it's 3%, 4%, and now it's, like you said, almost 7%, probably soon to be, in my opinion, 8%. So it's doubled, almost tripled. The more money you're borrowing, the more that's going to cost you. Whereas if you're paying cash, it's gonna, the property values will come down, so you could hold a little bit longer, perhaps put all the cash into the property, because interest rates rising typically bring property values down. What you're speaking of is a little different too, and not to be too complicated, but when you're dealing with a multifamily dwelling, apartment building, or even 4-family, 3-family, sometimes 2 families, there's enough interest of buyers there where the rents can increase. So if the market is even coming down with property values, people need to live somewhere.
Mhm.
So oftentimes they'll rent, which can bring rental value up, which for a pure investor, they look at return, right? So now, even though property values in general in an area, town, state are depreciating, if rents are coming up, because again, they have to live somewhere and maybe they can't afford a place that they wanted before where the interest rates have come up, but they want to live in that certain area. Now they'll rent. That drives rental prices up.
That kind of brings me to what I was going to bring next say was that a lot of if you follow some of the hedge funds and the larger institutions, they're putting a lot of their money. And I think I read something, I don't know if it was Chase. I think it was Chase. They're putting a significant amount of money towards real estate right now to purchase it, rentals. So they, as I was speaking of earlier, as an investment, real estate can be a smart decision now, and a lot of the bigger institutions are, leaning that way as well. If you follow the money, you can see that they feel like it's going to be a good opportunity. So it depends on what you're doing. And to another point that you were going to make, that last point on this is getting in the game, right? Building equity. It's never a bad time to get in the game, especially if it's going to be a long-term play.
Yeah, absolutely.
So now, having said what we just went over, how can we better assist as agents to control these emotions with buyers and sellers? Because I was having flashbacks. Steve brought this up earlier. And new agents, and I discussed this with some of our team members because some of them are only starting off 1 or 2 years. They haven't experienced, and I'm really trying to prep them. They haven't experienced the market the way it was prior to the run-up.
And you can say whatever you've gone through, but it's like many other things in life, unless you've gone through it yourself and worked through this, it's hard to describe, and it does test, like I talked about several times, your mental ability to push through, and it's a grind, but it's also an opportunity. I view it truly as an opportunity. But I think it starts with what I was saying before. As the listing agent, when you're meeting with these sellers, you paint a realistic picture and give them honest numbers and an honest assessment of what it's going to take to sell that property. And it may take some patience. It may take some time. You could give them averages of days in the market, but you could tell them it could go longer than that. Seasonal has a lot to do with it too. We're entering the holidays now. Yep. That slows down in any market buyer volume. But if the listing agent representing the seller doesn't set those expectations properly, the whole transaction becomes a little bit more difficult, because now if you've overpriced a listing, even if you have a buyer willing to pay a realistic price or a fair market price, the seller's expectations are out of line, and it's very difficult to get that transaction together, even though it may be mathematically a very fair situation for both parties.
Yeah. I mean, we were so, as an agent, we were so used to, not that we wanted to, but we had to kind of favor what the seller wanted. That's just the market that we were in, right? And you have to get out of that mentality. So, to not do a disservice to your client if you're representing a buyer is, shifting your mentality away from, what does the seller want? What does the seller want? Because that now can end up hurting your relationship with the buyer.
Well, there was many times that our team was representing buyers, and we would say to them, we would like to do some extra due diligence. This is about how long it's going to take. The best and final offer is due in an hour. We don't have time to do the analysis. The market we're guessing will dictate here. And maybe we try to give them our whole strategy with our team, which I've set up, is we give them a 50-50 number, meaning there's at this line, they're asking 650 and they're going way above. At 701, $701,000 on a 650,000 asking, at that point, you have a 50% chance of getting it. They literally flip a coin. That's probably the number that half the offers will be below and half the offers will be above, based on what we've seen in the past. If you go above that, you increase your probability. If you go below that, you decrease your probability. And then it would depend on their comfortability and their ability to afford the home. And we would that was a good method and then if we went 50-50, they didn't get it, or slightly above, we would say, we can't promise you, you just have a better chance. And if they go below, nearly always they would lose the property in a bid.
Apologize, this is a dumb question, but you don't know what other people are bidding or proposing. So
no, it would have to. So the ethics on that would be the seller would have to let the listing agent know that they were willing or would like to disclose the other offers. There's a few times that might be advantageous to the seller, but almost always it's not. So if I'm representing you as a seller and we're asking 600 and I have a $651,000 offer, I don't want to really tell that to 12 other people that are interested in bidding, because it's likely they're thinking perhaps higher. So if they come in at 680, we're ahead of the game. But if I told them 651, they may come in at 652 or 665, or you don't want to. That's one of the reasons too. There was escalation clauses, and not to get too far off topic, but what that was at a certain point. For example, I was selling a home in Oakland, New Jersey, for a close friend and client of mine. So I think we were priced at $699 at the time, and we ended up selling it for $805. But the highest offer at a point was $765 on $699, and with an escalation clause. And I said, we're not accepting escalation clauses. I explained to the seller what that was. There's a slight advantage, but there's mostly disadvantages in my opinion. So we kicked it back and said, you just got to bring your best offer in. So they went from, I think they were at 755 with the escalation. Our best offer was 765. So they were outbid by 10 grand. They came at to 805. So they would, if with the escalation clause of $1,000, we would have got 766. So they would have beat the other offer by 1,000. So it would have been 765 to 766. Instead of getting $766,000 for the client, we got them 805 because we kicked back the escalation clause. But that's very, knowing those little nuances is very important, because you're going to be able to get your seller the most you can. But it's very important, like I said, to really set the expectations. So going forward, the seller understands the market. That market then was last year. That's much different than today, and he called me at the last minute, said, hey, I know what the market's doing. Maybe we should ask 800 or 749. I said, absolutely not. This is a good price because there's a huge search point there. You're going to get a massive pool of buyers through, and no matter what, it's going to bid up. If it's worth it, I don't know. But if it doesn't, then we're really glad we didn't price it there. And if it does, then we did the right thing. So we did price it at $699 and we got $805. I'm extremely confident if we priced it at $799, we would have maybe got an offer or two at that point because it was so strong, but they would have come below. There wouldn't have been. I think we had almost 20 offers. So
yeah, and that was a good question. It as Steve explained, it is legal for that to be disclosed, but I think in most cases we never see that. It also just keeps it more fair, right? You don't want, if there's, especially in that market where there's so many, how many, you're going to go back to 20 agents and say, hey, this was the best offer.
Well, to clarify, it's permitted.
Yeah,
you're right. It's permitted if you have the seller's permission in writing to do that. You have to act in the best interest of fiduciary duties if you're representing the sellers to the seller. So if you feel as though that's proper, you could advise them, or you could ask them either way, would you like to disclose the offers? Ultimately, it's up to the client. The client says, no, you cannot disclose those offers.
Right.
But from the buyer's point of view, you get one shot to put your offer in. It's not like, oh,
No,
we get
No. So in that market, most people were putting offers in, and then as they came in, the listing agent would typically call what would be a highest and best or best and final. So you kind of get two shots there. But that's going away, right? We're not getting all those multiple offers.
Gotcha.
And it is permitted as we explained, but once you get the seller's permission. But I didn't run into it too many times. I mostly run into, and of course, as agents, we're going to ask. We want to try to see what's going on.
Sometimes you'll get a hint. We really don't give hints.
You might, yeah.
But on the other side, we'll ask for hints. We don't have a fiduciary duty to that client. We just trying to represent our client. So we may say, for example, is it over asking price? That's not a direct, we don't know the exact number, but can you give me an idea if it's over asking price? How many offers do you have?
Yeah.
Do you have any cash offers? Do you have any offers that are directly through your sales team? So you want to know what you're competing with.
Any data helps. How many offers do you have? Well, if you got 20, I can kind of figure out how far the range is going to be from low to bottom. I also like to help out my buyers when I'm working with buyers, is ask the listing agent what else besides the number will help that client of yours. And typically that's a huge important ask. And the answer, especially in that market where the buyers were extremely flexible, helps secure some deals as well.
Good stuff.
So
we I don't want to interrupt you, but we do have some live questions here. Connor asked, do you have any tips for empty nesters who are making the decision to sell their home and downsize?
They're looking to sell now.
They're going in the condos.
I guess so. Yeah, they're looking at. I guess their kids are gone or went to college or whatever, and I guess they're looking to sell their home. I guess, and I mean now's probably not the best time, but
it's never a bad time to really downsize because you're getting rid of, number one, a huge property, most likely that they don't want to further take. They want to relax, right?
Yeah.
They don't want to continue to
upkeep, and
right.
Else.
HOAs in a condo, whether it's a townhouse or a condominium, eliminates all that for you as well. Now you don't have to do the yard and rake the leaves and worry about the gutter. So that's all taken care of. So we are seeing tons of empty nesters go to the waterfront community, for example, where we are, or just any condo community. And
it could be a smaller ranch. I have a lot of clients that have large homes, 7,000, 10,000 square feet, that all of a sudden their children have gone to college. There's no real need. We're in this huge home. I'm actually selling a home across around the corner from my house. Same sort of thing. I think it's 7,500 square feet. His kids are in school, and they want a smaller house, less upkeep. So I don't know that they're going to be condo people, which is a great option, like Alfredo said, but it's not for everyone. But you could still get a smaller ranch or something much less to maintain. Utility costs are lower, taxes are lower, and then if you're traveling, you're not worried about this huge property. But I think it's a good time as well, because even though the market's not as strong as it was a few months ago, like I said, we have a ways to go. So we're just entering a depreciation cycle. So over the course of the next months and years, you're going to see property values going down. So if you trade, in essence, a larger piece of equity or asset for a smaller asset, you're weathering that storm. You're hindering that bet that things will go down, because you're going to take the equity out of a larger asset and then use a piece of that equity, that money, to buy a smaller asset. So as it comes down, percentage-wise, a $500,000 home, for argument's sake, is going to lose roughly the same percent of perhaps $2-3 million. If anything, we see that the luxury homes on the larger scale tend to lose a bigger chunk.
Yeah, and plus, just because you're downsizing, and typically an empty nester is doing that because their kids went to college, whatever the case may be. It's still going to be probably a long-term hold for them, right? So, I think maybe the question was because, the market's changing, they're not getting the high price point where we were seeing before. But, you get to buy into that market as well, right? So you're just trading.
I think it's a great time, as long as they've got a professional that's going to properly represent them. They're going to set the expectations correctly. They know pretty much a good idea based on the comps, the comparable sales, the math of what they're going to get, what the timeline looks like, and also where they're going to go. What I see a lot of times is sellers, rightfully so, are uncomfortable because they have an idea of what they think their home is worth because it's available online, although oftentimes it may not be really accurate, but they get an idea of what they think it's worth at least. But they don't know where they're going to go. Where do we want to go? Not only geographically, but also where can we afford, and where do we want it in proximity to where we are now? Do we want to be closer to somewhere else? Maybe, like we said, their child is still in state, but in a different area, or do they want to move out of state? So it's just a matter of them figuring out, okay, if we're going to sell this bigger home, where are we going to go? Oftentimes these bigger homes we deal with, and I don't know how big this client's home is that asked the question, but they're in towns that it's less often we see a smaller property in some of the towns. We deal a lot with Franklin Lakes and Saddle River and the towns in New Jersey, that you get some smaller properties, but they're still expensive, and it's much less frequent than other towns that may be a little bit more affordable with just smaller homes in general. The median house pricing is lower.
Yeah, and if you're an empty nester, like you said, the towns matter. If you're an empty nester and you're living in like a Hohokus, Saddle River, Franklin Lakes, you don't need those school systems. You don't need, some of those perks of having a family. You can downsize, and
there's more flexibility for sure.
We got one more. Should first-time home buyers be prepared for bidding wars, or should they focus more on getting a better deal for a great home?
So bidding in any market, there can be bidding wars. Right. It just depends. And I keep going back to the same thing, but what did the listing agent and the seller agree to at the meeting? And if they're working together, what's that pricing and what's it based on? Again, you could, for argument's sake, you could price a home at whatever you want. There's no restrictions. It's whatever the listing agent's willing to take it at and whatever the seller is willing to agree to. But if those expectations are correct, or perhaps in this, for argument's sake, are lower than the market, because they say, you know what, we recognize the market is correcting itself. We don't want to go through the holidays. We really want to sell this property. We want to move on. And I'm confident that your strategy of pricing it a little bit below, perhaps in a search parameter that we wouldn't hit these buyers otherwise, because now we'll compete better with the same prices as if we go above. For example, $599,000 versus $619,000. You're competing with $500,000 to $600,000 homes usually. So you're going to compete very well. But if you're at $619,000, all of a sudden you're competing with $600,000 to $700,000 homes. Maybe they're a little bigger, maybe they're a little newer, maybe they have a little bit more desirable location. I don't know. But you're going to compete with more homes that offer more. So if those expectations are set properly and you're aggressive with the pricing right now, you still could definitely witness a multiple bid situation, but it's justified. The pricing that they agreed to is below what the market has just dictated other properties are worth.
Yeah, and to add to that, I would listen to if you're working with a buyer's agent, listen to their advice that they're giving you. If they're if you are working with a buyer's agent who comes across as knowledgeable, which I hope that's the one that you would choose, if they're providing you the correct market data, and you're just searching online, we can't, be active searching for properties for all of our clients all the time, because you're doing it at 1 o'clock in the morning. There's limitations on how much we can do. So if you're looking online and you see 4 homes in the same town and they're pretty similar, and one is priced a bit lower and it just came on the market, then maybe you can, unless there's something geographically wrong or structurally wrong with the house, then you can expect more activity on that one, right? Low inventory in that particular market, priced very aggressively because that seller understood that maybe that's the strategy to take, then maybe that particular property. So listen to your agent. If he or she's providing you comps and data and understanding the market you're buying into, maybe it's a great market that's very desirable and inventory seems to be shifting between only 1 or 2 homes available at this period of time. So, but the good news for buyers is that statistically we're seeing less and less of that. I mean, that's what the numbers are dictating. So you can expect it in cases, but overall you are not going to run into it as much as we certainly have in the recent past.
And I think the last point was something the team.
Yeah.
Orientated.
So from a team perspective, right? So how can we as a team our team, for example, or any great team out there, help either a buyer or seller in these times and better understanding the market shifts, or just more importantly, what can we do that may be more difficult for an individual agent in this time. As a team, what can a team provide a buyer or seller that may be more advantageous for a client to work with?
That's a great question, and that's the main reason why I set up the team originally. Is I became a top producing agent in the state and in the country, top 0.1%. And there was times where I was so busy that I wish I could do more of the back office stuff. And I didn't have the ability, or I don't want to say trust, but I didn't have someone that I felt as though I could pass that off to at the time. So I was working all night, and sometimes there was a lag in getting that information back to the client. So when I set up the team structure, the way that I began to kind of jot it down on a piece of paper and work through the business plan was, I wanted my agents to function like a surgeon, in the sense that they go in to the surgery with the client prepped and ready. So you have nurses and you have admin staff and you have everything helping you. So your job is just surgery, and you go out, which is showing the home or doing the listing, and you're out. So we have marketing staff. We have internal sales agents who set appointments for our agents and help with the scheduling. We have a coordinator who helps with all the transactional stuff and the compliance issues. So the agents have much more time to focus on their day-to-day business, which is their clients. So they have the ability to show the property or be on the phone with the client and following up with the client. And they have a lot of this other very important work done for them. So they have the ability to service the client at the highest level.
Yeah. And, having so many agents on a team, and we're a growing team as well. We sometimes have clients bounce from one area to another. They're not sure, they're coming from out of state, perhaps not sure exactly where they want to be. We have agents all over the place. So if we need to bounce off ideas off each other or get more information about a particular market that maybe we weren't as sure about, we always have a constant back end support, if you want to call it. That's going to only help our clients that we're dealing with directly, because we have so many people with so much different knowledge in our team throughout,
and licensed in multiple states.
Right.
So if they wanted to go from New Jersey to New York, Alfredo just got his New York license as well. But we have that ability. Oftentimes people do want to go from New Jersey to New York, New York to New Jersey, or they're looking in both, or they're selling properties that they had in New Jersey, but they have another place in Manhattan. We can assist with that. We know those markets. We have MLS access, and we have agents that are licensed and active in those markets.
Yeah, and when you have a team, it becomes easier to add on all the different things that we've done with our CRM and the social media aspect that we're able to provide our agents more exposure to video.
There's a tremendous amount of tools. But beyond all the tools that we have, a customer service application, we have dialers, we have like staff that works for my agents. I really believe it's a camaraderie. I really tried to build a family type atmosphere. And the industry, what surprised me most about the real estate industry when I first came into it, or at least one of the things, certainly, it was a shark infested water where you could be sitting next to someone 2 feet away and they will steal your buyer. They will literally come to your desk. And I don't say that lightly, because that actually happened to me. And I don't like to say negative things, but that is the absolute truth. And if you're not aware of that's what's going to happen, people would answer the phone and I'm sitting right there, and it's for me, and try to speak with the client and take them out. It is what it is. It's shark infested waters. You're trying to get clients. I get it. I was surprised by it. I don't think we run it that way, but more than that, it's an ability where you have 20 agents on our team or whatever we have now, and they can trust each other. We have coverage for one another. You go on vacation, we can cover you. Your deal is safe. We're not going to steal it from you. We're going to protect you, and we're going to protect your client's interest. And it's an ability to bounce offers off one another, that you can trust one another. So it's a pretty cool thing where we have a very trusting network, and the ethics are aligned, and the interest is aligned. It is a genuine feeling within our team. And I've worked very hard to achieve that. And and Alfredo as well. We've worked very hard to keep that, because keeping it was probably more difficult than achieving it as we grew. So we've tried to retain agents that have the best interest, not only in themselves and growing their team, their business the right way, but also when needed would step up and help a fellow team member.
Yeah, and all that translates to better service for our clients. Their needs are going to be well met and better served when we have a large pool of agents to bounce off.
And especially the agents that have some experience that come on our team, it's always the same reaction. It's almost like a sigh of relief. They almost can't believe that there's other agents that have their own business that do very well, that are on our team, that truly want what's best for them. That's a different feeling and mentality than the industry in general. And again, I don't want to speak negatively, but that's the truth. The truth is we are all subcontractors. We're all in it for ourselves. We're all 100% commission with the rare exceptions of someone that might be getting some small base. So it's you have to be hungry. You have to be aggressive. It's the way of the business. So to have someone that's sitting next to you that wants to help you, genuinely want to help you, is a nice thing. And we've built that. So it's been great.
Yeah. So I think that is going to wrap it up for today.
Awesome.
As always, if anybody has any questions, comments beforehand, for our next episode, always feel free to leave some comments in our posts.
I appreciate everything Undefeated Media has been doing for us.
Thank you.
It's been
Appreciate
great.
it. Absolutely.
Great company. Great to have them as part of our team. And we look forward to continuing to grow this. And I appreciate everyone's support. I continue to get messages I just got a message from a high school friend. I haven't talked to her in years, just saying that, I'm so proud of you. You deserve the success. And they see what we're doing now. So it's nice to get out there, and it's nice to help other agents that might be listening, and certainly, most importantly, probably help the clients, the consumers, have a little bit better knowledge of and understanding what's going on with the market and the industry itself.
Yeah.
Awesome. Great stuff, guys. Thank you for answering my questions, the questions coming in live. And we'll see you next time on Team Braconi Live.